Well, I think the thing to start with is, where we are in the liquidity cycle. And, we've been warning for, a few months now that we're getting near the peak. I mean, we haven't really been going risk off, but we've been saying that we're getting closer to that peak. And that peak could be, a watershed clearly for risk asset markets. It was great on the way up as liquidity was going into markets. And it may be a pretty difficult ride on the way down if that roller coaster starts to dip and start to go back towards a trough. And that is really the danger we've got to try and spot. We've been arguing that if you look at the liquidity cycle, it was anyway slated to peak sometime later this year, probably early or possibly early 2026. A lot of people are suggesting it's different this time. It's always dangerous to say that. So I think we've got to be alert to the normal tempo, the normal frequency of the cycle. And that says that we're in the grey area now where the cycle could end fairly quickly or fairly soon. And we've got to be alert to that, any tensions in markets that we're seeing. And I think what we're beginning to spot are signs that we may be getting an inflection. Now, the key question is how the policymakers react to that. It's not over until it's over, of course, and policymakers may react positively. But I think the problem is they're sort of grappling around now, trying to find exactly where they are. They're not too sure themselves. And there's a growing reluctance, particularly among key US policymakers. I'm thinking here of Scott Bessent, Treasury Secretary, Stephen Meehan, the new appointee of the FOMC, and actually Jay Powell himself, chair of the Fed, to say that they don't really want to be expanding the Federal Reserve balance sheet anymore. Again, they don't want to do a QE because they reckon it's ill-directed or can be misdirected. It basically inflates asset markets over the real economy. And it really has been behind these great wealth inequalities that we begin to see, opening up in Western societies. So the argument is they want the real economy to benefit now, not Wall Street. And that is really a tension that we've got to try and work our way through.